Let's get a move on then and connect with Vinod Karki. He's head of strategy at ICICI Securities, now joining in on the show. Good morning, Vinod. Great to have you on board. Let's begin by talking about the earnings season, a whole host of numbers that have come by. I just want to understand from you what your sense is in terms of the overall numbers, because we have seen that the revenue growth has been a bit sluggish. Do you reckon that so far that is going to continue, that financials will perhaps continue to lead from the front?
Hi, good morning. Thanks for having me on the show. So I don't think we'd see any significant change from last quarter, the trends that you just spoke about. Primarily because we are still in a phase where the aggregate demand is still very weak. The investment cycle, according to all indicators, are still weak. And within the credit growth, if you see, it's a retail credit which is growing, while industry continues to be sluggish, right? And so broadly, more or less the same kind of narrative where the aggregate demand, which usually reflects in the sales number, will be muted. Also, global companies which are like in the IT and pharma have their own challenges. So in terms of top line, the picture is still clouded and muted. And on top of that, if you see in this quarter, there was this added disadvantage of weather conditions where the rainfall extended into November itself, So a lot of activities like coal mining, construction activity got impacted, power generation got impacted on the thermal side. So all these effects are additional demand problems. Rural demand was again weak. So these will continue to hamper the top line. But having said that, what we saw last quarter also was that since the expectations are pretty weak, the beats, or you may say, we are not seeing too many misses on results. So even in this quarter, when we saw the initial results, there are no major disappointments, which is a good thing, because market moves on expectations. So if you don't get big disappointments, that's good enough. So for starters, I think this theme that you will get more beats than misses, I think might continue in this quarter also.
Okay. All right, encouraging to hear. Where do you see those beats coming in though, Vinod? Would it be stock specific, particular pockets? Where do you actually see outperformance?
Yeah, so what we saw last time also was that the beats were actually largely across the board. So even where the growth was muted, let's say the FMCG companies, which the volume growth was anywhere between 4 to, let's say, high single digit, but as compared to the expectations, companies did not fare that badly. So while the growth might still be muted, but it will still be better than expected. Now, if you see sectorally, where the lift is coming from earnings growth, it is the same picture. So all the banks, the financials, they are coming off a low base, especially the corporate banks. So you will see their good performance over there, especially where some of these recoveries are happening, like in the SR case, So some of these corporate banks will show a bump up over there. Cement was one sector where despite low volumes, sluggish volumes, the price action was good, and there the realizations were better, right? And the volumes are expected to pick up from here on once the whole the government's focus on infrastructure continues, and will, I think, get a better push in the upcoming budget. They have already shown their intent through the NIP, how they intend to spend over 100 trillion over the next 5 years. So broadly, the picture looks good from a kind of small recovery in overall demand. I think in Q2, the GDP has kind of bottomed out. And from Q3, you will see not a V-shaped recovery, but at least a marginal recovery from here on. And if you see the December and November PMI numbers, both in manufacturing and services, if you see some of the mining activities like coal mining activity in December, I think all this is showing that there will be some, what you should say, pickup in overall demand. The outlook for the Rabi crop is pretty good apparently, given the latest numbers that we have. If the realizations on food prices is good and the cash flow in the rural space improves, then even auto to some extent, where two-wheelers, tractors could show some improvement. Although I mean the CVs and PVs might still have some pressure over there. Yeah.
Vinod, you in your latest report, you're talking about how the high beta stocks within the Nifty have significantly outperformed some of the low beta stocks that we've seen, the small and micro caps as well, playing a catch up. Do you believe that the underpinnings for the beta rally continue to remain robust?
Absolutely. See, the major driver for the beta rally is a pickup in global liquidity, and this is not a beta rally just for India. It is a global beta rally we have observed, where high volatile, high cyclical stocks are outperforming globally, because after a phase of quantitative tightening from August, September this year, and in November from the ECB and the PBOC, if you see, and the RBI itself, global central banks are pumping in money, which is leading to liquidity improvement, and therefore cyclicals, high beta stocks have just about started to move, I think. So there is some leg to go there over there. And what this will do effectively is that within asset classes, which is like large, mid, small, this rally will spread from the large mega to, because so far only the large beta stocks have outperformed. So we were expecting that it will spread to the small and micro caps also, where there has been a collateral damage and the margin of safety has significantly improved, especially in the small micro. Mid is still reasonably valued, I would say.
What are the preferred stock picks within the high beta universe?
Yeah, so we have named a few in the report. If you see some 5 stocks over there, it's a mix of metal stocks and consumer discretionary. So basically it's a mix of, even sectorally, forget, I mean, the stock picks. Sectorally, high beta would be from the financials, the consumer discretionary, industrials, metals, you know. So these stocks, as the broader economy and global growth comes out of fear of recession, we should see continued up move till the time the story turns.
Okay, that's the view coming in on some of those high beta plays. Let's also get in a sense as to how you're looking at the overall macro setup. We have the inflation, which has been continually seeing a rise. There is that little bit of a threat to the fisc. What are you expecting in the budget that could assuage some of these concerns?
See, inflation and interest rates are a key factor for this kind of cyclical beta rally. So if structurally inflation and interest rates were to go up, there is no way this rally can sustain. But we have a different view in terms of especially the food CPI spike that we saw. If you see, it's largely food driven, and what we are saying is that even in food, the dynamics are such that it is a supply problem rather than a demand driven spike in inflation. And if you see how the upcoming the Rabi crop is shaping up, it seems that there will be surplus food production, and that means that the supply issues will not expand beyond this. Obviously, some of the veggies, you know, like onion and all, which had a seasonal issue because of extended rainfall and the crop got destroyed, I think such things will revert back to normal. Onion is already started reverting significantly back to normal levels. So I don't think this CPI, food inflation-led CPI spike is a structural thing, while the core inflation is still 3.7%. And oil prices have not spiked despite the Iran-US standoff. So I don't see a structural up move in inflation. Whereas, I mean, on fiscal, you are absolutely right. There are big challenges. But I don't see the government expanding its fiscal deficit in this environment where they want the interest rate transmission to happen, because if they really expand the fiscal deficit, then there is no way this transmission of interest rate will come by. So the most of the activities, I think, to spur investment and boost the investment cycle by the government will be, I think, done mostly off budget and through their other plans like the NIF and other agencies like NHAI, where they raise money outside the budget. So that theme will continue, but there will be a strong focus in this budget to kickstart the development spending overall within the fiscal constraints.
All right. Thank you for joining us, Vinod, this morning.